Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 19th of December 2016, final week now, running up to the holidays. So we'll be wrapping things up in the next couple of days. So just be aware we won't be making the daily videos every day. I think probably Wednesday, Thursday will be the last time before we come back in the new year to start again. And hopefully you guys will be able to make that jump across into profitable trading. I'll do all that I can to help you achieve that. One of the things that you need to develop, ability to have this spatial awareness about what's going on within the broader context of the chart, so that you can get an understanding of where you may find these areas, these pockets of support and resistance, these pockets of volume that are not really as they would normally be described in the textbooks, where you have this perfect level of support, price bounces off it, you have this perfect level of resistance, price touches it and spins on a dime and turns away. The vast majority of the time that doesn't happen, as you know. It's much more rough and dynamic than that. But if you can get a sense as to what different traders are doing for different reasons, motivated for different reasons, then it'll really help you be able to read charts more effectively. Understanding how to trade traps is about your ability to place yourselves in the shoes of the traders who potentially took trades, and be able to see that on a chart and then be able to figure out if they got into trouble as a result of that decision, or did it work out for them on this occasion, because it doesn't always not work for them. And when you do that, and you're able to look at the broader context, you get a much more overall view of the markets and why price moves in the way that it does. So without me ranting on too much, let me just give you an example. We have over here what I call an outside candle trap. It's also a rat trap, which is another type of trap, which occurred just in there. And all of this area here is volume. It's trapped traders in there. Who were essentially looking to trade that pullback, right, in this area here. So the market strongly moves up, pulls back, bounces off that level, comes back into it, and then bounces off it again, and then very much accelerates towards that level of resistance, right, before turning away. So in here, where that candle opened, wherever that candle opened and then went up, this is where it reverses. This is where people get caught out, right, in there. So there's a whole load of volume in there that was buy trades originally. So if people have been caught in that as the market turned on them and reversed in that outside candle in here, then that volume is supply, because those buyers, if they've been caught in here believing that the market was going to follow through and it goes against them like that, they've been holding those losing positions for some time, and now they are slowly but surely getting close to the point where they're going to be able to exit those positions at break even, because that's obviously what those traders would do, right? If you're stuck in there, you're going to want to bail out at break even, because money is not really in your psychology now. It's about being able to get out of that trade unscathed, right? So originally the motivation was profit, but unfortunately for them, they never got above the high water mark, and it's always been a negative situation for them. So when they if they are to get the opportunity to get out of that, not when, sometimes it doesn't happen, they will bail out over here. And the idea of making money from this situation is definitely diminished. I mean, you'll get the odd person who will look at that as price comes back into the level and go, oh yeah, that analysis that I did 2 weeks ago, I'm yours, right? But virtually most people virtually won't make that choice, have that opinion about this, because they've been down here suffering a drawdown. Maybe they've made some mistakes, they cancelled their stop losses. So again, what I was talking about earlier is when you understand traps, you're understanding how other traders behave in certain circumstances. So when a trader buys a pullback, they'll look to put stops below these structures, right? So as this price, as it goes their way, everything looks good, but then as it turns, it starts going against them, and the decision then is made potentially to cancel the stop loss. So if they did do that, and we know that a degree of people will do that, because people are generally quite bad with discipline, making lots of trading mistakes, don't want to lose the money, they're under pressure at this point, and then as it drops through that level, they find themselves down here in this situation, and now it's just about bailing out at break even if they get the chance. So we have traders, let me just clear this up a little bit, we have traders in here trapped, and going through that process that we've just run over, we understand the motivation for that action, right? They are going to exit their buy positions at break even because they've been losing money all this period of time. Now then, that's one element to this overall broader context, looking at this price action. But what else can we understand? Well, that's going to help us to make a decision as to whether or not we should sell up here, and for what reasons there would be more likely to be a supply-demand imbalance in favour of supply by working through this logic. So let's check this out. So we have down here a level of support, right? Being touched once, twice, thrice, 4 times, loads of times, 5, 6, 7. You get the idea. And if you were that trader, if you were the trader who had been a buyer down in there, as I said before, not all support resistance traders don't fail every time they take a trade. If you were to buy down here and you were trading that level of support, right, where would be your most logical place to take some profit? So you buy of support, you're looking at this price in this type of range, right? It's like a value area. Where would you normally, if you were in that circumstance, where would you consider taking some profit? Now me, if it were me, I'd be looking at the other side of that range. Now here's the other part to that though. As price comes into, let me just change the colour of this pen. If price comes into this area here, right, am I going to go all the way to the top edge of this range before I pull my profit? Or is it more likely that I'll start questioning whether or not we're actually going to get there, and maybe, just maybe, as it starts to approach that area, I'll start to take some of my profit off the table, right? I've been making money. This is a trader who's made money. So they're motivated. They are motivated in a different way. So their motivations are very strong, but they are different to the people over here who just want to get out of break even. They're still highly motivated. They want to take that money, right? They want to take that money, and these people are motivated for a different reason. They want to get out without losing money. But net, what that is creating is an increase in supply. Okay, so in essence what that means is that you are increasing the chances of having a positive outcome for your trade, because you could understand what another group of trader was thinking by putting yourself in their shoes. So you instantly increase the chances of that trade potentially working out and being profitable. Not that, you know, in the end any of us know whether or not a level is going to be profitable or not, or traders. That's not the job of the trader. The job of the trader is to facilitate probability by taking high probability trades, the highest probability that you're capable of at that level of development where you find yourself now. And one really important skill set to develop is this idea of looking at the market more holistically and getting an understanding of where traders are who've been involved in the market historically, and becoming those individuals and thinking about what you would do in their situation if you'd taken that trade for those reasons. And if you'd been trapped in this trade, what would you do if you were in that situation? And this really helps you build up an ability to select better trades. So trading traps is what's so awesome about trading traps is that it guarantees, almost guarantees, that there will be a degree of people stuck at a certain location on a chart, losing money, and we always want that to be present whenever we're taking a trade. So the reason why I say almost guarantees it is that sometimes, though, that supply-demand imbalance isn't enough for it to turn the market and for us to make money. And what I'm talking about today is an additional tactic that you can employ to make that selection, that trade selection, that trap selection, that all the better, right? If you find you've got yourself a good trap, and other people taking trades for different motivations that can add weight to your trading idea, that can give you more of a chance of making money as a trader. So trading traps is a complete way to look at the financial markets. Took me well over a decade to uncover these traps. There's more than 20 of them in total, and what we've done is we've hacked the trading strategies of the masses. Right? Doesn't matter what you do, doesn't matter what type of trading strategy you employ in, we've hacked those strategies. So if you'd want to be on the other side of that equation, so that you're trying not to be trapped, although of course it can happen, but when you take the trade initially, you're on the right side of the market. You're not losing money. You're entering the market always when someone else, your opponent, is under pressure and losing money, and that's always a good place to be. So if you'd like to learn more about traps and start your new year off on the right foot, click the link below and join me in my trade room. I'd love to see you there. Take care, guys, and have a nice day.